Well, who really knows? I mean, nobody really knows what's going on here. So let's just talk about the top five zero down investment construction loans for flippers with bad credit. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today's conversation is pretty simple. I want to talk to you about the top five zero down investment construction loans for flippers with bad credit. First of all, let's just talk about the hard money construction loans. What are those? For experienced investors who are looking to challenge themselves by, let's say, building a home from the ground up or completing a tear down and gut renovation of an existing structure instead of your average fix and flip, a construction loan for investment property is often the most attractive option, and I'm going to tell you why. A new construction hard money loan is a short term loan used to finance the construction of real estate investment property. So, like other hard money loans that we have discussed on this show, a portion of the funds is distributed at closing to finance lot acquisition, and the rest are held in escrow. Do you understand? So the construction funds held in escrow are distributed in areas or after certain phases of the scope of work are completed. It could be 80%, 40%, 50%. It all depends on the covenant in the mortgage in the closing package, right? So the scope of work is used to create a draw schedule which designates at which stage of the project certain work will be completed and at what cost. So once a particular phase, let's say, or draw is complete, an inspection is ordered to confirm the work has been done. At that point, the lender will actually authorize the release of the funds to a certain limits, right? So as soon as the hard money lender gets the confirmation, the funds are distributed. So the whole process usually takes, in our experience, about 3 days. And the draw process helps both the hard money lender and the borrower by keeping the project on track and within budget. So what are the benefits of a private lender construction loan, really? Especially if you're a flipper with bad credit. Now, with most hard money loans, the loan amount is based on the SA's house or lot value combined with repair or construction costs. An additional benefit here is that there is no minimum credit score. That's fantastic. Think about it. If you have bad credit, you have a hard money loan with no credit score. That's wonderful. Now, having said that, keep in mind that unlike hard money fix and flip loans, experience is kind of critical for an investment construction loan. So the hard money lender can fund up to 70 or 75% of the land value and 100% of the construction budget, capped at 75% of the ARV. With interest rates from, let's say, 9 to 11%, points ranging 1 to 2%, and a loan term up to 18 months and 24 months in some cases, seasoned investors rely generally on construction loans like this to finance their business. So the cool thing here is if you are an experienced investor, you know how crucial a quick close can be, right? So how do you actually get new construction hard money loans? The thing here is it's a lot easier than you think. The process of securing a hard money construction loan is much different than that of a conventional mortgage, really. Unlike a conventional loan, which requires a significant amount of paperwork, a new construction loan requires relatively light documentation. As long as you do the research up front. You got to do the research up front. This is very important. So once you have completed the new construction loan application, the loan officer and underwriter will review the deal with you and order an appraisal if the deal fits. So the underwriter will ask questions about your experience as well as request copies of the construction plans and other relevant documentation. From that point, your hard money lender will issue, let's say, they call it a term sheet. So they will issue a written term sheet that basically outlines all the loans details. So at the end of the day, you can't say, well, there were hidden fees. It's all about transparency, right? So you have the term sheet depicts all the details, and you just go over it and you read it. One thing I want to see here is that the loan then moves to processing, where the few required documents are collected, and ultimately the loan is closed by an attorney. So before I actually go into the rundown, let me quickly acquaint you with our loan evaluation approach. We do have a strict approach when it comes to categorizing, reviewing, and evaluating all the investment construction loans for flippers that we have on this show. Check this out. All right, folks. I want to talk to you now about number 5, Crowder Financial. Our score 8.5 over 10. Now this is a pretty interesting company. They have nationwide coverage, and they have new build bridge loans up to 18 months nationwide. You're talking here single family, multifamily, and commercial. And in terms of the loan size, you're looking at the 100,000 to 3 million. All right. And you can if you want 100 million, because they actually have the capacity to finance up to 100 million. If you have that needs, you need to contact a loan specialist, and you have up to 90% loan to cost acquisition and construction. What we really love with Crowder Financial is the speed with which they actually process the information. They will work with you all along the process, all along the way. They are there. They will ask questions. They will support you. Their goal is to make sure the project works for you so you can pay them. So it's basically, they try to have a win-win situation. So you have the average loan max is 90% LTC, 70% ABV. You have up to 100% funding if land owned free and clear. Rates starting at 7.99%, and you pay interest only when you draw. All right, and the origination fee starting at 2%, and the maturity here, the term is 6 to 18 months, and there is no prepay, extensions up to 36 months depending upon the project, and you can close in as little as 10 days. I was talking to you earlier about the fact that the process is very speedy with the Crowder Financial, and we love that. They want you to have a minimum credit score of 420, so bad credit will qualify. In some cases, in some states in the country, they actually would want the minimum to go all the way to 620, but it actually fluctuates, if you will, between 420 and 620 in terms of the minimum. All right, and they even welcome foreign nationals and non-permanent residents, aliens. So this is pretty cool. In terms of the loan types, they cover everything from single family, multifamily, mixed use, warehouse, industrial, self-storage, and more. So you can see that they basically cover the whole 9 yards. It's all about spreading their operational gamut as much as possible. So that's pretty cool. All right. And one thing I want you to also know with Crowder Financial is that you can actually it's better to contact them instead of applying online. It's better to first contact a loan officer, discuss your particular deals with them on the phone before actually filling out an application form. Number 4, folks, I want to talk to you about Stratton Equities. Now, our score 9 over 10. And this is a company that specializes in new construction private money loans. And they have loan programs for real estate investors, builders, and developers. And what we love is that they are pretty good. This is a company that has the liquidity that you need. They offer financing for the acquisition, development, or new construction of ground-up development projects. And if you work with Stratton Equities, you'll have a direct private money lender. Here, we're not talking about a platform. They are a direct private money lender, and you will be working with them on new construction projects, which in the end gives you some kind of flexibility, right? Think about it. You have flexibility and capital to cover all the costs that relates to the project, from single family homes to larger multifamily properties. Okay, and one thing I want to say is that the terms of the loan. So you have up to 85% of project cost, loans from 75K to 20 million. We've seen instances where where certain equities are covered up to 100 million. It's all about the deal. It's all about the investors, and they have 12 to 24 month term, and the eligibility, the properties that are eligible run the whole gamut. So you're talking single family, detached, condos to townhomes and multifamily. And you can actually, the cool thing about having a private money new construction loan with certain equities is that as a real estate investor, builder, or developer, you actually have three significant advantages over conventional or bank financing arrangements, because a private money new construction mortgage program has a lot less documentation, a significant less amount of underwriting, and it's utilized for its speed, right? In comparison to bank new construction programs. So this is something you have to think about. And as private lenders, certain equities can fund quickly, efficiently, and within a flexible structure and terms. And we all know that if you are a flipper, if you are a new property developer or a property investor, speed is key. And with private money lending, you get that speed. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm just having a conversation with you about the top 5 zero-down investment construction loans for flippers with bad credit. Now let's talk about number 3, Genesis Capital. Our score, 9.5 over 10. And Genesis Capital is also another big player. So besides investment construction loans, they also provide loans for bridge, fix and flip, subdivision, infill, rental, hold. And the funding options range from under 100,000 to over 25 million. And the thing here is that they can actually, according to, we reached out to the company and they said that they can actually go the extra mile to tailor their offerings based on your needs. In other words, they can go all the way to 100 million or sometimes even 200 millions. It depends on the property. All right. So for new construction loans, you have ground up development for a single family, multifamily, and multi-unit project. So project funding, they can fund the project at initial stage or mid construction. You can cover, they can cover major renovations or brand new construction with the holdbacks, more than 50% of loan amount. And terms here, the terms range from 6 to 24 months. And they also have subdivision infill loans. So here you have vertical ground up construction financing for home builders. So you have a revolving credit line support for vertical construction, recapitalization loans on completed homes in 6 to 24 months terms. They also cover rental hold loans, especially if you have a construction loan that is associated with a rental hold loan. Then you can talk to Genesis Capital here. So they will provide capital for lease up and stabilized 1 to 4 units and multifamily, more than 5 units buildings. So they can help you with purchase or refinance. And it's fully prepayable, subject to 3-to-1 phase structure. And the term here is 36 months. So if you want to get funding with Genesis Capital, they actually have a very simple, streamlined process. First, you want to give them a call or send them a message through their contact form on their website, and you start discussing the project needs. You answer a few questions so they can have a better idea of what you're working with, and they will work out the details with you. So once they gather the information, they will develop a loan program for you. They will collect supporting documents, and you're ready to go. Simple as that. Number 2, folks, we have Asset-Based Lending, ABL. And our score, 9.5 over 10. Here is another big player, another solid player, and they offer new construction loans for experienced investors up to 90% LTC. Now, when we reached out to them, they actually said that they also cater to newbies. So they cater to experienced investors, new investors, bad credit, good credit. They cover the whole gamut. So for experienced or newbie investors and contractors, ABLs ABL's hard money loans for new construction offer quick access to leverage and underwriting flexibility not available from conventional financing. So while all deals are unique, ABL typically lends up to 85 to 90% of total deal cost. We've seen instances where they actually loaned up to 95% of total deal cost. All right. Besides, for construction escrows over 100,000 K, the borrower only pays interest on funds as they're drawn, and you want to use ABL because they have a high level of experience in the industry. They only ask for a credit score minimum of 660, even though lately in the last 2 years they've actually opened their lending program up to people with investors with bad credit, because again, in a hard money commercial loan, I would say, a situation, the focus is on the property, the focus is on the asset, not the equity, not the financial situation of the investor, right? So the interest rate hovers between 9 and 10%, 0.0 to 2%, and the advance rate on purchase up to 70% land value, the advance rate on construction 100%, the ARV 75%, and the property types range from single family to multifamily to mixed use. There is no prepay penalty. That's a cool thing with this, right? A lot of lenders will sort of kill you with a prepay penalty, but asset-based lending doesn't do that. And there are extensions available, and loan size again 100K to 2.5 million. The loan terms 12 months to 24 months, and in some cases even 36 months. Number one, folks, when it comes to the top 5 zero down investment construction loans for flippers with bad credit, we have LendingHome. Our score 10 over 10. In our view, based on our research, after reviewing tens of lenders out there, LendingHome offers the right constellation of services and products. And the cool thing here is that the company is a direct lender. So they use their own capital to originate loans. So after closing, LendingHome either sells whole loans to institutional investors or issues platform notes to individual investors, which provide access to the loan's underlying cash flow. And LendingHome is not really a crowdfunding real estate site where investors pull money into loans and once fully funded, the loan is made. The loans on LendingHome are already funded before being offered to investors, right? So they have actually they have reverse engineered the crowdfunding lending process. So the first advance the money to you as a borrower, and then later on they go and sell the loans in the secondary market, if you want to call it that way. So what are the terms for borrowers? So rates start at 7%. The property type limited to 1 to 4 residential unit properties, up to $1 million in terms of the amount. And we've seen cases where they went a little above. We have 75,000 minimum. Terms of 12 to 24 months. The fees of 2.5%, minimum of $2,500, and up to 80% loan to value. What we love about LendingHome is the solidity of the customer service, the experience of the team, the speed, the celerity of the application process, how quick they can close your application process. Very important, they can close the deal. And this is a company that has been backed by many investors, institutional investors, so they can actually cover a lot of deals. And the cool thing here is that they do it nationwide. Very important. All right. So the one thing you need to understand here is that the LendingHome bridge loan or construction loan program is designed specifically for property investors looking to finance their next flip or rehab or construction project. And the cool thing with LendingHome is that if everything checks out, from the time you actually start the application to the time you close, this can actually be 7 to 14 days. So 1 to 2 weeks. Now, I have a bonus for you. I actually have a bonus for you. While we were doing the research, we found another interesting company that we wanted to share with you. And this is called Encore Loans. Our score of Encore Loans, 8.5 over 10. And we just love the fact that they offer new construction loans For flippers with bad credit, they focus on SFR 2.2 to 4 units, MFR, up to 80% LTC, loan to cost, 6 to 12 month terms with extension options. And we love the fact, and the reason why we included them here is not only because they have solid solid customer service, they also have no maximum loan amount. Yes, you heard that right. They have no maximum loan amount. The minimum they want to fund is $50K, but there is no maximum. And with Anchor loans, you only pay interest on construction funds drawn on qualifying holdback amounts. All right. And you have, there is interest reserve available. So what they do is that you can use an Anchor loan to finance the acquisition and construction of real estate properties across the nations. And they can quickly fund your next construction project with speed, ease, and reliability. And one thing we love is the fact that they're able to, again, they cover the whole 50 states. And they are able to, even though they review new construction loans on a case-by-case basis, they're always open to trying new states, new territories, new regions, right? And this is basically what it is. And you can get funding in as little as 5 to 10 days. They have structured loans that are tailored to your needs. And again, they've been around for the last nearly 20 years now. So they do have experience when what they're working on. In terms of your credit score, they're not credit driven. So having good credit is great, but it's okay if you have bad credit. And in terms of cash reserves, I was talking to you about reserves before. They said that with Anchor loans, you as an investor should have proven cash reserves for down payments, construction overages, and monthly payments. Having said that, they have programs whereby they actually don't require a down payment. So because this is a zero down payment show, and we actually confirmed that with the company. So, but you have to talk to a loan specialist. If you don't have the funds to make a down payment, you need to request that beforehand. So you need to talk to someone in their loan team, and they should be able to take care of that for you. And it shouldn't be any problem. At least that's what they told us. All right, folks. This is pretty much it for today's conversation. I just want to thank you for your attention, and I'm going to quickly recap today's conversation here. So I was talking to you about the top 5 zero down investment construction loans for flippers with bad credit. And number 1, we have LendingHome, 10/10. Number 2, we have AssetBased Lending, 9.5/10. Number 3, we have Genesis Capital, 9.5/10. Number 4, we have Stratton Equities. It's the score is 9/10. Number 5, we have Crowder Financial. Our score is 8.5/10. And as a bonus, we have for you Anchor Loans. Our score 8.5/10. Thank you so much for your attention. Once again, I will see you next time. But until then, remember, stay marvelous.